everyone. Rick McIntosh, back by popular demand. Anyway, today we're going to talk about insurance, certificates of insurance. And as you can see here, we have a certificate of insurance. It's for commercial insurance. And first thing I want to talk about is the date here. So this date is the date that we gave the certificate. And a certificate is a snapshot of a commercial or commercial insurance policies. So the date is very important because that's when we gave it to them and that's when this snapshot was taken. So we have things in here like the producer, which is myself. We have the phone number, also, my information here, the insurance company, and please notice we have A, B, C, D, E, F. So we can have one insurance company on all different kinds of coverages, or we can have multiples. This NAIC number, it's important with some states because they track the insurance company using that. They put the number in instead of the company. So the insured goes here, so name and address, whatever insurance company is over here. Then as we scroll down, really don't have a certificate number in most cases or a revision number. Maybe on some larger accounts that may come into play. But we have some things over here. So insuring letter over here on the left-hand side. So that's the company A, B, C, D, E, F on top. So in this case, we just have one insurance company insuring everything. And so for the general liability, there's either occurrence or claims made. So claims made is a policy where the claim has to happen during the policy period. So during this year of time, an occurrence can happen outside of that. So some boxes are checked here. Additional insured. It's basically the sharing of your insurance. And it's both good and bad. So you're sharing your insurance. So you have $1 million worth of insurance, and now all of a sudden you get $500,000 because you're sharing it with somebody else. So that's kind of the bad thing. The other thing is you're involving another person in the claim that may have different interests than you do. A waiver of subrogation. So subrogation is when one company goes after the other insurance company. So in this case, they chose to have this waiver of subrogation. So it stops them from going against them, the certificate holder on the bottom down here. So that is not a very common request, but some of these other things are. So again, the policy dates and then the limits of insurance coverage. So some companies will do this a little bit differently. There can be different figures in here. Some companies won't give medical payments as an example. Some companies include personal injury and advertising in the other limits. So in that case, you'd put the word include here because it's not a separate limit. It's included in the other limits. So I'm not going to get into exactly what these things are. The next area is automobile. Again, same insurance company. So you can have any auto, which is like a car dealership that puts a dealer plate on different cars. Or there's a number of different situations. Most commonly, we use scheduled auto. So the autos, we tell them that's on the list that's on the insurance policy. You can also have it as all owned autos. And very common also is hired and non-owned auto. So hired meaning if you rented a vehicle or a truck or something. Non-owned meaning if your secretary went to the bank with a deposit, she used her personal auto during work time. You could be brought into a lawsuit if there was an accident and somebody was hurt. So also any auto, that includes hired and non-owned auto. So that's the best one. Not every company will give that to you in every situation, and it might cost a little bit more. Again, additional insured, sharing of liability limits, waiver of subrogation, so they can't come back after you, can't come back after the certificate holder, the period of time, and then limits of insurance. And most commonly, commercial insurance is written on a combined single limit rather than a split. In this case, $1 million, which tends to be most common. The next area, again, same insurance company, excess or an umbrella. So either excess liability or a true umbrella, which could cover more. And then, again, they can be on an occurrence or claims made basis. Most common is occurrence. And in this case, they have a $10,000 retention. So important to understand, it's not a deductible. A retention is something that an umbrella would cover that the other policies, the general liability or auto or work comp, doesn't. So it can be more broad. It's important to note here, any proprietor, owner, executive, is anybody excluded? Well, in smaller policies, yes, on work comp they are. So in this case, it's just one gentleman running this company. So he's excluded unless he opts in. Now that's in Minnesota. So other states can be different. Normally we collect some type of exclusion or inclusion on every policy that we write in every state. Also ask for a waiver of subrogation. A lot of times that's $100 additional. Some of these other things too, by the way, the other additional insureds, those can cost money. Some are included in the contract, depending on which company and program you're using. So again, annual on the work comp. And these boxes, we always check per statute because we're writing it in accordance with Minnesota law in this case. So they have statutes. It's not manuscripted. And in this case, 500,000 limits is minimum to be able to get this $2 million umbrella that's above here. So just to touch back on this, any employer excluded, let me scroll to the next page here. So in Minnesota, you have to have so many hours of payroll or so many people in the company, so many employees, to be able to automatically be included. Otherwise, you're excluded. So again, this form is, do you want to be included or excluded? So again, once you hit a certain level, you're automatically included. So back to the certificate again. So now this company asks for lots of things. Actually, we call this kind of a nightmare. But it's a good example because of all the different things that they want. So additional insured, waiver subrogation, which were in the boxes above, checked. And we also list them down here. We usually will list the company here. And then some companies want extra verbiage. Now, we do not like this. And what we do to get around this in Minnesota is, let me scroll to a couple other pages that I have here, is we give them a letter talking about you can't change a certificate based on a request from a third party. So a third party would be the certificate holder. And so we give them a little letter saying that there's been some changes in the laws and that you cannot, it's not highlighted on my thing here, but filed forms may not be amended at the request of a third party. So is this special language altered? I don't know, but we don't like to put it on there. We have companies that won't put it on there. We have other ones say, well, if it says it in the contract, then it's okay. Well, great. Then we use that insurance company, I guess. But we avoid this and we send out certificates without this language. And we get pressed, we send those other letters that I just showed you, showing the statutes. Most of them will back down. But the best way to get them to back down is you should have the contractor or whoever is the insured here go back to the certificate holder, who's on the bottom here, and ask them if they can waive some of these requirements. Because these can be expensive. So small contractor, the general liability part might be $1,000. The commercial auto might be another $1,300. A $2 million umbrella could be, $1,000 to $2,000, depending on what type of contractor in this case it is. And then the work comp, just the minimum work comp policy, subject to audit, of course, is like $535 a year. So if they don't have to have that, then they would opt not to buy it. They'd save money, especially when they're starting up and they don't have any money. So we deal a lot with startup contractors. And I'm probably one of the people in the agency that is the best versed on doing certificates, and except for one person, and he knows who he is. So these words, we try to get around that. We try to get the certificate holder to back off on some of the coverages that they need. A lot of times they will, and they can always buy them later too. So the other thing that's listed on here is we always attach the policy forms. So here we got like 3, 4, 5, 6, 7 different forms attached to the same certificate. So the certificate holder is entitled to a certificate, the policy, and its endorsements. That's it. They don't get any special language unless you want an errors and omissions claim. And by putting on these endorsements, they can see them. So if they got a problem with them, or if something's missing and they accept it, well, that's how it goes. So all certificates need a certificate holder down the bottom left-hand corner. It's best practice to never ever give a certificate out without a certificate holder, because in our case, this next statement over here, we notify the certificate holder if policies cancel. So they'll get an email, we'll doctor it up, write canceled across the coverage that's canceled, send it out to them. And I'd say 1 out of 3 contractors end up calling us back and needing the coverage again. Because if it says the state in here and the state gets one, they might take their license away. And that could be important because some people even want to keep their licenses even if they're not working, just in case they come back and decide to do this again. And then every certificate is signed by the authorized representative. In this case, it's me. And so I guess that's about it. I mean, there's a lot of things on here, but I take it for granted, and I didn't realize how many people don't understand these. And, I missed something. This general aggregate business. So, like I mentioned, all these things cost money. So you don't check the box unless they got it on the insurance policy. And we've learned to double check the policies because we catch companies making mistakes. Imagine that. And so on these general aggregates, it's generally always check policy, because if you want per project or location, there's normally an additional charge or additional policy form that needs to be added. But again, some companies do it include it automatically. You have to check with that whatever company that you happen to be using. And now, did I miss anything? I don't think so. I think we got a wrap. So, ladies and gentlemen, I hope you learned something by this. And until we meet again, take care.